If somebody told you your credit score was bad and you did not know what to do next, this episode is for you. Listen, friend, you are not bad with money. Nobody even taught us how this works before you even needed it. That is not even your fault, but that stops today. I want to deal with a myth that I don't even know how it got big. And I've heard so many different people say it, and I just want to say it's wrong, okay? I want to say the myth that says that you have to have a balance on a credit card just to build credit is wrong, okay? Let me just bust it up. And that one fact, or fiction rather, that one thing could actually be costing you so much money in interest for years that you've been following that principle. Paying your full balance every month builds your credit just as much as costs you zero in interest. And again, this was something that nobody taught us until today.
When I think about his grace, his freedom, something like a woman prays. I'm grateful for the loving that you gave.
So what does credit really affect in your real life? Maybe the apartment application that got denied. Maybe the fact that the car loan that you just got is at a 20+% interest rate. Maybe the mortgage payment, right? You finally got the house, but the mortgage payment is so much higher and you're having to pay what's called PMI because of your credit score. Maybe it was the cell phone that did not get approved, or the insurance that did not get approved, or you had to pay a deposit down, all because of your credit score. These areas literally are affected or changed or altered or whatever by your credit score. So I want to let you know that credit literally impacts every area of your life. And let's not forget to mention the business loan that was not available when the business needed it. Because here's another thing that is not taught well is that when you start a business, a LLC, you do all the paperwork and all of that, that the business automatically, your credit is just magically. But as a business lender for many years, I know that when a lender is looking at your credit for you to get capital into your business, typically in the earlier phases of the business, I would say the personal and the business credit is married, okay? They are going to look at your personal credit as a means of making decision for your business credit. And a lot of people do not talk about that. That is so important. So in the earlier phases, the business does not have any history. So they can't base it off of your business credit because you don't have anything to go by. So they use your personal credit as a determinant factor. And as the business gets older and more mature and all the things, that's when they can start using the business credit. But this is a part nobody taught us either. Now, these ranges that I'm about to provide, it really depends on the scoring model, but for certain FICO models, 800 to 850 is considered exceptional. Okay, so baby, you up there. You beep, beep. Okay, you is up there. Now, 740 to 799 is considered very good, very good. I think it's Tabitha Brown, very good. Okay, you getting up there. Okay. Now, 670 to 739, it's good. It's good. It's decent. It'll get you in some doors. It's good. Okay. Now, 580 to 669 is fair. Okay, it is. Not doing the best, but not doing the worst. It's fair. Now, below 580 is considered poor. Okay, that's the range. Typically below 580 point is considered poor. However, I do want you to know that it's literally a starting point. It's not where you end. It's just a starting point. So wherever you are on this range, it does not mean that that is the end. It's just a starting point, which if you are at the 580, listen, we got to go up. That's it. The only way up is up, okay? Now, I want to talk about the factors, but I'm not going to cover all of them in detail. But I do want to definitely highlight one of the biggest factors that maybe a lot of people do not know, and I did not know early on. And I was like, okay, I'm paying my bills on time, all of this, like all this stuff. And I just could not figure out why my score was lower. What it was is something I want you to know about: credit utilization. So this is the one that most people are not aware of as much, and it is literally a quiet beast that is pulling people's score down, and they don't even know it exists and why. Okay, so let me break it down this way. If I give you a credit card and the limit on that credit card is $1,000, okay, let me just say I just gave you a card. It's $1,000. It's $1,000, and you go take that card and you spend 900 of the $1,000. Now your credit utilization is 90%. What does that mean? That means you utilized or you used 90% of the limit that I gave you, right? And so the goal is to be under 30%. So what does that mean? That means if I give you a credit card for $1,000, if you were to multiply that 30% out, that means your limit should never be under $300. I like to tell my clients, listen, you got $1,000 card in your mind, that's a $300 card. Okay. And I also like to take it a step further, because it is even better when you're under 10% utilization, which could be a little bit harder depending on the circumstances. But what does that mean? That means if I gave you a card for $1,000, that means your limit in your brain is $100. Okay. Okay. So that is credit utilization. Honestly, if you really look at your credit report, which we're going to talk about, if you get that credit utilization and make sure all of the credit card and line of credit accounts is under 30 to 10% or as close as possible as you can, I'm talking about a jump in your score okay, not today, but in the next billing cycle, a jump in your score like crazy. Okay. So if you just do that one thing, you will see a raise and a boost in your score. Let's talk about the other four. I'm just going to hop on them real quick, in and out, and then we're going to get to the next step. I don't think I said this. Credit utilization is 30% of your credit score. Okay. So if you think about a pie, credit utilization is 30% of that pie. The 35% is payment history. That means pay everything on time, all the time. Okay. I remember when I had a credit card and I was a single mother at the time. I was just trying to make it, baby. And I had a credit card and it was the minimum payment. And I was just like, am I going to get diapers or I'm going to pay this $25? Now, to this day, I always say, I wish I would have just asked my mom for $25, because, baby, that thing really messed my score all the way up, okay? And it wasn't even that deep. But I learned then how essential, how big a drop could happen just from a 30-day late, a 60-day late, collections and charge-offs and all of that, okay? So payment history is one of the biggest chunks of your credit. The other one is length of credit history. Is 15% of that slice of pie. So 15% of your credit is length. And the biggest thing to remember is a lot of times when we try to pay off our debt, we always try to close out the credit cards. You got to know that that is limiting your credit age, and it makes you look like you are not able to handle credit as much because you've had this card for 10 years, 15 years, and now you just close it. That eradicated all that history. So you really don't want to close old accounts if not possible, unless it's charging you a fee. You just don't want to close those old accounts. Credit mix is 10%. Okay, 10% of the pie. It just pretty much means you got different types of credit. It's a car loan, a mortgage, a credit card, a student loan. Those are all different types of credit. It just pretty much says that you know how to handle different types of credit, not just this one, but different mix of credit. Now that last one is 10% as well, is new inquiries. And one of the biggest things I want to give you as a piece of advice is to space out your applications. That means if you at JCPenney and they saying, hey, do you want a credit card or whatever, you say no. Okay, you protecting your credit at all costs. But you space out. If you go to a dealership and they're like, hey, we're going to run an application, just keep in mind a lot of times they're running your credit through 6 and 7 different agencies at one time. So keep that in mind as it pertains to spacing out your applications. One thing I would recommend, go get you a pre-approval from a bank. Right? They only run your credit one time. Take that pre-approval letter to the dealership. That lets you know how much you can afford anyway, and then go from there. Okay. And right now, I just really want to encourage somebody, because somebody is listening to me right now like, girl, you really don't know how raggedy this go is. No, I want you to stop real quick, friend. I just want you to pause. I want you to understand that this score is not a reflection of who you are. It does not define you. And it does not say that you are bad with money. Okay. It does not say you are bad with money. It simply means that nobody really explained to you the rules before you needed them. Financial literacy was not taught in school. Nobody told us like credit cards, student loans. Some of us were signing up for student loans right out of high school. That's illegal in my opinion. But the point is, nobody actually taught us this before we needed it. So we got a part of a system, okay, and didn't know what we was doing in the system. And so that is why this series is important, because I want for us that did not know, nobody taught us this, for us to actually be able to take the information, arm ourselves with it, and go to the next level. So I want to encourage you, friend, you are not behind. You literally are just getting the information that you should have gotten a long time ago, okay? You're not behind, okay? I know you may feel like, okay, I'm in my 30s, I'm in my 40s, I should have done whatever. But I want you to understand you're not behind. You are literally just getting the information that someone should have given you a long time ago. That's the part that's unfair. Now, you know I got to put some scripture in it. You know I got to put the word of God in it. Proverbs 22:1 says, a good name is desirable more than riches. A good name is desirable more than great riches. Okay. What does that mean? Your credit is a representation of your financial name. Okay. Listen. Okay. Let it be what it be. Your credit score is a representation of your financial name right now. However, names can change. It can change. How many people change their name on a regular? Okay, so just like people can change their name, today they is Brown, tomorrow they is McLean. Hey, right? So names can change. And so just like your credit can change, your financial name can change. And it really just starts with one step. So as we close out this video, there is one thing, not five, just one thing I need you to do today. Okay, you can do this today. I want you to go to annualcreditreport.com. I will put that in the chat notes below, in the description notes, so you can pull it, because there's some scam stuff out there. Okay, so be very careful. But I'm gonna put it in the chat. But go to annualcreditreport.com right now. Okay, after this video. Okay, that's one thing you could do right now. It is free. Free 99. It's free. It is federally mandated, so nobody can legally charge you for it. And it actually gives you the ability to pull your free credit report. Now, it will not give you your score, okay, unless you pay for it. I would not recommend you even get your score right now, but it will pull from all three credit reports, from Equifax, Experian, and TransUnion. So you can pull all three reports, because some cars or lenders report to one and not the other. So you do want to pull all three different reports, okay? So you're going to go to annualcreditreport.com today, right now. So, Crystal, what do I do when I go there? Friend, I'm so glad you asked me, okay? What you're going to do is you're going to first scrub that credit report. I recommend that you print it out with a little highlighter, and you're going to look for one account that is not yours. You're going to look on there and see if there's an account on there that does not belong to you. You're going to look on there and see if there was an account that was posted past due that has a delinquent payment on it that you know that is not true. You're going to look for any inaccuracies, right? You're going to look for that. You want to update your address if possible, because that's another way that people are able to deal with, identity theft and all of that. You're going to make sure all of the accounts is correct. Every single account on there, okay? On all three reports. That is the first thing you're going to do. Why does this even matter? Because 1 in 5 Americans, look around, have at least on one of their reports, they have inaccuracy. They have some wrong information. They have at least one error. And that one error can be dragging your score all the way down without you even knowing it, right? So you get to dispute it. And to dispute it is free. It is your legal right to dispute a transaction that is inaccurate. And that one thing can shift your score going forward. So I would recommend you look for anything. Scrub that report. Baby, scrub it, okay? Only thing on here is the stuff I did, okay? And I can fix the stuff I did. But stuff somebody else did, get it up off of it, okay? You got one job. You got one job, okay? Not 5 things. One job, okay? From this one video, the first thing is to check the report. Just pull the report, check the report, print the report, do a little highlighter if you want to, or you could just do it on your computer. You could do that. Do what you want to do, how you want to do it, but you got one job, okay? Check the report, find out what does not belong, and dispute it. That's it. That's your only job. That is your only job. Everything else is secondary, okay? But that is the one step that I have for you today. Your credit score is not a verdict of your character, friend. It's not. It is simply a snapshot of your history. It's just showing what happened when it happened. Okay? It's just a snapshot, not a verdict of your character. Listen, I want you to remember history changes. That happened back then, but you can make a new step and change the future. You know more right now than you did 10 minutes before you clicked on this video. You know more right now. And the one thing that you are going to do is going to matter for everything else going forward. So listen, this is the jump start. This is the next step. This is the elevation for that credit you desire, that financial plan you desire, and all the things. That one step is going to compound upon others and take your finances to the next level. And in closing, I want you to start there. Start there. You got your homework assignment. You know what to do. Start there and come back and tell me what you find. And also, right now, just put in the chat right now, my credit is changing today. The score may not have changed, but your mindset has changed. My credit is changing today. Listen, that's encouragement for somebody else seeing it. That's motivation for even you. That's accountability. That's all the things. My credit is changing today. Drop it in the comments. Listen, like, share, subscribe to this channel. Also send this to somebody else that they feel like they are behind, that their credit is impacted, and all of their life decisions or whatever the case is. Send this to them, because one of these tools can really help them potentially get to the next level. So send this over to them. That's your only job. I really hope you learned something. Again, nobody told us this until today.
When I think about his grace.